We've had a very small correction here. Markets are getting very oversold here. Sentiment is very negative. We're getting set up from a contrarian basis. We're getting set up for a decent little rally here in the markets probably over the next couple of weeks as we discuss what you need to know before the bell this morning. Talking about the markets first, let's start with the S&P 500. And we talked about yesterday that we were coming down, we're setting on support at the 100-day moving average. Kind of important that we hold that. And in today's daily market commentary, so if you go to the website, realinvestmentadvice.com, or on our Substack page at Lance Roberts, our daily market commentary is out. And I go through this analysis right here and explaining a bit about using stop losses. This is one of the tricks that happens with stop losses is that you break the 100-day moving average. Let's say that was your stop loss level. I like moving averages for stop losses because they trail the price of the stock. You break it and immediately you sell it, and then the market immediately turns around and gets back above that moving average. We broke it yesterday morning, right? Another sell, right? No, back above it by the end of the day. So again, this is what you want to get, and I kind of go through that example and explain kind of how to use stop losses in this type of environment. You've got to give it a little bit of time here for the markets to sort itself out. This morning, markets are going to open higher. But again, we've had a very small correction here. Markets are getting very oversold here. Sentiment is very negative. We're getting set up from a contrarian basis. We're getting set up for a decent little rally here in the markets probably over the next couple of weeks. So again, you've got so much negative bias right now. That's a contrarian signal for markets typically, and typically turns into a market reaction to that, which reverses that sentiment. So again, it's not guaranteed. But again, retail investors are super, super bearish. Now, at the same time, we've had a very nice rally in bonds. Bonds have about an 8% lead over stocks so far this year, which is kind of interesting because, again, where the stock market is now, bonds have been doing very, very well. But they are approaching the 200-day moving average from underneath. They are getting overbought right now on a pretty good basis. So again, I would expect a bit of a pullback here, probably back towards on TLT. Expect a pullback to around 90. If it can hold that support level, work off some of this overbought condition, that should eventually give the bonds the ability to make that push above the 200-day moving average as economic data continues to weaken. And we're certainly seeing that in a lot of the economic data that's coming out. We're seeing that trending growth of weakness, economic growth heading back towards 2%. That's going to pull yields back towards 2% eventually as well. But again, they're not going to go there in a straight line. And unless you have some type of, kind of economic event or some type of market related event that causes a real shift into safety over risk, it's likely going to take a while for yields to come on down. But again, they are heading in that direction, and we're starting to get a more and more kind of technical support for lower yields in the markets. But we talked a little bit about Bitcoin a minute ago, and this is kind of where we are. Bitcoin came down, challenged the 200-day moving average, bounced off that a little bit yesterday. So again, that correction is not surprising, but this is the one thing we've talked about previously is that Bitcoin is really a proxy for risk, and it's a proxy for the S&P 500. So while you've had about a 3% decline in the S&P 500, you've had about a 15% decline in Bitcoin. So again, it's kind of a leverage bet on equities. And so as you get these, and then this is the problem with volatility, is that when you have a lot of assets that are highly correlated to each other and some act as a leverage bet on something else, when the one kind of proxy declines a bit, you get a much bigger roll-off in those kind of leverage bets against that. And that's what you're seeing with Bitcoin, MicroStrategy, those type of things. Those leverage bets are paying a price right now. And again, it doesn't mean that the trade is over, but we've had a big correction here. Bitcoin is very oversold. I would expect a rally here in Bitcoin, and if you get that rally in Bitcoin, that's that risk on proxy. That should translate back into higher prices for the S&P 500. So again, you've got a really good setup here for a bit of a rally in the markets just to reverse some of the short-term negativity. Now, even if your view is that the markets are going to go through a bigger correction at some point this year, that's certainly possible. But you're not going to do that in a straight line, and not going to do that without some type of kind of exogenous event, something to really impact the markets. Tariffs aren't the issue. Everybody knows about the tariffs. As those come along, the markets are processing those. You've got to have some type of break to create that much bigger blow off in the markets. And again, you've got such negative sentiment, oversold conditions right now. That's going to likely result in at least a short-term tradable rally to take advantage of. So again, if you're looking to take on risk, right, and leverage risk, you've got a decent setup in things like Bitcoin right now. If you want a more kind of just normal trade, the S&P is in a good position right now here for a bit of a rally, and we should see a bit of that recover. But that's what you need to know before the bell this morning.